The million-dollar question: what will declining interest rates in 2024 do to the housing market? In this video, I'm going to talk to you about what the housing market is for certain going to do if and when mortgage interest rates decline. I'm going to show you exact scenarios of what the numbers look like buying today at certain interest rate versus buying at the future at a lowered interest rate, and talk about what I know being in the market day in and day out as a mortgage broker licensed nationwide. So stay tuned. I'm going to give you my insight. All right, Matt Gouget, Matt the Mortgage Guy, powered by You Mortgage. In today's video, I want to talk about the impact of lowered interest rates in 2024, what it's going to do to the housing market. I promise you that everybody, and I mean everybody who knows all the economic factors that go into mortgage interest rates, know that interest rates are going to decline in the next 12 or 18 months. When, how, and how much is still in question, but mortgage rates will decline in the next 12 to 18 months. The question is, what's that going to do to the housing market? And as a buyer, what should you be prepared to do? Go to greatmortgagebroker.com, connect with me and my team if you're looking to get pre-approved. Let's jump into it. First and foremost, where we sit right now in early 2024, with rates recently having a little bit of a tick up and hovering around 7% on a 30-year fixed rate mortgage, while people were very upset about 6.5 to 7, this little shift upwards, I am going to implore you to view this as a positive. Interest rates going up recently is a good thing for buyers. And I'll tell you why. As a buyer, you were probably in a market, especially if you're at the entry level, where you were competing against multiple offers. As rates go down, there's more competition. So at 6.5, you no doubt had more competition that you'll have at 7%. This 7% won't last forever. As I said, mortgage interest rates are going down, and the reason why is for a whole nother video. But if you were competing against 8 offers at 6.5, and now you're only competing against 3 offers at 7%, count that as a blessing. You can go out there, have a better chance of getting your offer accepted. Whether you have a 6.5, a 7, a 7.25, you're probably not going to keep this loan for more than 12 or 24 months anyway. So the main objective should be to get your offer accepted. Now, I'm going to show you what happens with pending home sales over a period of time as mortgage interest rates fluctuate. This is going to tell us what to expect in the future if everyone's expectation comes true and mortgage interest rates fall. So as I pull up the chart, keep in mind, this is the last 3 years, mid-February of 21 to mid-February of 24. Forgot what year we're in. I'm sorry. 21 to 24, last 3 years. So the orange line is the weekly average of a 30-year fixed rate mortgage. This blue mountain back here is pending home sales. And I know what some people might say is, hey, listen, pending home sales isn't measuring how much demand there is in the market or how much, every house is going to have offers. Well, it doesn't. It's directly correlated, right? Environment where there's more pending home sales, and this pending home sales number is higher, is a more competitive market. And I can tell you with absolute certainty, people felt this in 2021, right? When rates were at or below 3%, pending home sales were at historically high levels. It was highly competitive. And then what happened in early 22, as mortgage interest rates started to climb, pending home sales came down. With pending home sales coming down, there was less and less buyer activity, less and less buyer demand, not to the point that we saw like some huge buyer's market, but to a certain extent, when rates spiked up in Q4 of 22, I remember how it felt like real estate had pressed pause, like we had entered real estate winter. And these pending home sales numbers being at the lowest levels they've been at in years, there was less competition there had been for years. There was more opportunity for buyers to get seller credit. There was more opportunities for buyers to actually look at a house, and it might be on the market for 25, 30, 40 days. Where if you go back here, these homes were within a week. 80% of them were in contract. Stuff was flying off the shelves. The same thing happened as rates went up in Q4 of 2023. Pending home sales bottomed out, demand waned, and there was more opportunity for buyers. So here is my word of warning. As rates even, came back to a 7% level and went from their, peaks of high sevens there, you started to see demand tick up. If we got January's data for this, I promise you, January and the first half of February has been a highly competitive real estate market in many markets. And I tell you that because this 0.5% increase that we've seen is a great thing for buyers. Take advantage of that. Don't wait until mortgage interest rates come down over the next 6, 12, 18 months to then put yourself in the game, because all you're going to find is more competition. And with more competition and not a lot of inventory, inevitably, you're going to pay a higher price. So my next slide, I'm going to show you what happens when you get a lower interest rate, but you end up paying a higher price. I can already see the future, and I already know that in the future of 2024, as more and more buyers enter the market, some of these, dozens or hundreds of pre-approvals that I have and that other mortgage brokers have across the country, as they start to come off the sidelines and start to wake up and enter the spring buying market, it's just going to be more and more competitive. And it's going to be something that you're going to look back and go, you know what? Maybe I shouldn't have let the interest rate dictate when I bought. Maybe I should have bought when I felt like I could go out there, write an offer on a house I really like and actually get it accepted. So I'm going to bring up this slide to illustrate if there's a house that you can purchase for $500,000 with a 6.99% interest rate, and you've got principal, interest, taxes, and insurance of $36.46 a month. A lot of people in this price point in the, Sacramento area where my office sits are thinking, you know what, if interest rates go down to 6.5 or 6.375, I'm really going to be in a position where that payment's going to be more affordable for me and it's going to make sense for me to buy. The problem being that I can see into the future. And when interest rates come down and there's more demand, it's happened time and time again, and it will happen again. That $500,000 house will have multiple offers. 530 is probably a conservative estimate for what it might sell for. It might go 535, 540, but even if it only went up by 6%, with interest rates coming down and more demand coming into the market, you could get a 6.375 interest rate and still have a higher monthly payment. This monthly payment is going to be $36.68. When either one of these loans refinances in the future, one, you're going to have a higher balance when you buy it for a higher price. You're going to pay higher property taxes when you buy it at a higher price. Everything's going to be more expensive, even when both of these loans within the next 3 to 5 years get refinanced. So I really believe, especially for those at the entry level, a little reprieve in interest rates that we've seen. Take this for what you will. Let me know in the comments down below. You think I'm a complete idiot? You agree? Mortgage interest rates are headed down. The Fed, while not having the data yet to lower the Fed funds rate and have the effect on the 30-year fixed rate mortgage, so they're not going to cut the Fed funds rate in March, is going to happen. It's just going to happen a little bit later. So comment down below, good, bad, and ugly. If you like the content, comment, subscribe to the channel, share it with a friend. I appreciate it. We're just knocking on 1,000 videos on this channel's door. I think I got 997. So I'm going to continue to make videos. Let me know what you'd like to see. I really, really enjoy this stuff. I hope you do too. Thanks again for watching, and greatmortgagebroker.com. That's how you connect me and my team. Talk to you soon. Bye-bye.